do it top down, right? So what we're first gonna cover is a top down analysis because that's the most important part. Then we go over a drawn liquidity. After drawn liquidity, can build logic and reason to every trade, right? The narrative. So let's get straight into it. Where's my chart right over here? So you see my chart, right? Give 1 second. Apa mana merah miole? All right, let's start off. So 12 month right over here, you can see, well, I usually start off with a 12-month time frame, right? 12-month time frame is usually when I start off my, so when I do my high time analysis, I usually do it at Saturday or Sunday when the market is closed, right? So when I start from here, I start with a 12-month time frame. You can see in a 12-month, currently there's a CRT right over here, right? 12-month CRT low got purged. So that means our short-term liquidity for the first couple months until the short-term liquidity gets met, our drawn liquidity is all over here to that CRT low, right? After CRT low, our drawn liquidity becomes a CRT high, which is all the way out here. So this is a long-term base, right? So this may get hit the next couple months or next year, right? Once I get that higher time frame bias, which is a 12-month, I'm gonna scale down to the 3-month time frame to make you get a redefined type of analysis, right? So on a 3-month time frame, we have the same thing here. 3-month, we have a CRT right here as well. So right over here, mark that out as well. Our CRT low got purged. In a 3-month time frame, we have a sell side liquidity as our key level, right? To support this 3-month CRT low. Because for a 12-month time frame, it's such a higher time frame, right? So on a 12-month time frame, we don't need to look for a key level, but on the 3-month and below, we must be looking for a key level supporting our CRT, right? So on a 3-month time frame, you have this key level, we have the CRT, we have a key level that supports it. So our short-term liquidity on a 3-month time frame low got met. So our long-term liquidity now is the CRT high, right? Now, once we get a 3-month time frame, we're gonna scale down to the monthly. On the monthly time frame, what do we have here? We could now in the monthly time frame look for more than one. We have to look for just not key levels and CRT. Now to look for other forms of drawn liquidity, which is the daily range, the CRT ranges, right, etc., right? So on a monthly time frame, now I have to go look and see, like, okay, is there a daily range here? In this case, you can see there's a daily range. Market press out a low, press out a high, right? So market made a stable low right over here on the monthly time frame. Eventually, it made a stable high all over here, right? And eventually, this is premium, this is discount. And discount, you want to buy, and premium want to sell, right? You can see once the market made a stable high right over here, market in a monthly time frame, we went from a monthly ERL to discounted IRL. So premium ERL to discount IRL, right? And you can see how the fair value gap right over here, it failed simply because it's in premium. So in premium, you don't never want to buy, you want to sell, right? So this is the higher time frame. So higher time frame, we're currently where we at EURUSD. We're in a discounted area, and we tap the discounted fair value gap. So in the monthly time frame, we're currently going more than, we're just not going from a CRT. We're going from a IRL to ERL. So we have different forms of drawn liquidity in display, right? Let's say we have a monthly IRL to ERL, which is the 12-month CRT high, right? You can see how everything here is connecting, right? It's connected to the higher time frame, so nothing is random, right? So we gotta mark out this daily range high. So once the discounted daily range gets hit, since this daily range is bullish, we're gonna drawn liquidity is gonna be a daily range high after this 12-month CRT high gets purged, right? So now that's the other parts. Now I have to look at the CRT as well right here, right? In the monthly time frame, we have a monthly CRT right over here, right? Monthly CRT logo soup, right? Two monthly CRT. So our first drawn liquidity becomes right over here. A monthly time frame. Our second drawn liquidity becomes right over here on the 12-month time frame, right? In a monthly time frame. You can see right over here, once this monthly CRT gets hit, right? Our drawn liquidity now is gonna become this other monthly CRT, right? Once this gets hit, our drawn liquidity is gonna become the 3-month CRT high, right? Right over here. Once that gets hit, our drawn liquidity is going to become the monthly ERL with a monthly 12-month CRT high, right? And once that gets met, our drawn liquidity for the here is going to become the daily range high because you already tapped the discounted area. So once it taps that discount, our drawn liquidity automatically becomes the daily range high or daily range low. In this case, this daily range is specifically bullish because you press out the CRT, you press out the low first, then you press out the high, right? And now we could do it. Now, once I get the 12-month, 3-month, monthly, I go scale down to the weekly. And the weekly is where I care the most about, right? Weekly, daily, and the 4-hour is where I care the most. But the higher time frame, I should still know the higher time frame, right? Because the higher time frame, if I trade a weekly, sometimes weekly may go down, but the higher time frame may go up, right? And just may have a mixed match bias, and I may, face some technical problems, right? So in the weekly time frame, you can see currently in a price action of EURUSD, we have a CRT here, right? The CRT, right? CRT low got purged inside the candle right over here. You can see the candle right over here, right? Yeah. This candle has a model number 1 confirmation inside of it, so it's still valid, but it's a lower probability. You can see how this candle right over here pushed down a little bit because of lower probability. Yes, less chance of working out, but it's still gonna work out due to the higher time frame, right? This is the weekly time frame. It's still gonna work out, right? So if we're using time frame alignment, the weekly time frame, how do we know that this candle confirmed the CRT? Simply by going to the 4-hour time frame, right? Because using time frame alignment, we have a weekly key level, weekly CRT. We're gonna scale down to the 4-hour chart to look for the CIZ confirmation, right? In the 4-hour chart, this is the low. This is the candle dug below this low, right? That tapped this, that souped out this low right over here, right? So before the weekly candle closed, we had a confirmation, right? You can see this. This is with this is Tuesday. Tuesday confirmed day, right? So eventually you can see how it still got respected throughout the whole week. Right now you can see how the market's coming back down, doing a little pullback because market needs to go through phases, right? So from here, we have a confirmation. This is the current price action of EURUSD. We're gonna do a bar replay as well on this, right? So that's what we have right here. Now this is the higher time frame. So now at the weekly time frame, I have a clear bias to the upside, right? I'll have a weekly as well as a weekly ERL to IRL's algorithm inverse. We can go to the high that creates this IRL, which is all over here to the weekly, to the monthly CRT high, right? Which is all over this candle right over here. We go to the daily time frame. Now we're gonna scale down even lower to get an even more redefined bias and drawn liquidity, right? And the daily time frame currently, what we're doing is we souped out a low, souped out a high, made a stable low and a stable high, right? So market first, it tapped the discounted area. After it tapped the discounted area, our drawn liquidity automatically becomes a daily range shot, which is over here. You can see how the market is currently heading to it, right? As well, we have a daily IRL, which is the daily one form of drawn liquidity out of 5. Daily IRL to ERL, daily CRT to the upside, right? So that's now the higher time frame. Now, once I get my higher time frame drawn liquidity, starting from the 12-month, and the only time I look for a 12-month is when I'm, Saturday or Sunday, right? But I usually look at the daily and weekly every single day, right? Now I'll go at the 4-hour time frame for our narrative and logic and reasoning to every trade, right? So now I'll go to the 4-hour time frame to build a narrative to a trade here. You can see the trade is win or loss because I made a technical mistake. We're gonna talk about that as well, right? So on a 4-hour time frame, we're gonna mark down the 17 o'clock open till the 17 o'clock close. Because why? Because that will help us, know what we're looking at, right? You can be way more efficient on what we're looking at for the Pacific day, right? Instead of looking at some random candles, right? This candle right up here, it's a 17 o'clock 4-hour candle, which is a Pacific candle, right? Because 159, right? 1 p.m., 5 p.m., 9 p.m., 1 a.m., 5 a.m., 9 a.m., right? That's a Pacific time of a candle. And as you know, like you see how people tell you to trade during a Pacific time, which is only during like 9:30 a.m., right? That's false. How is that false? Simply, you go search up in Twitter, people literally prove that, that's false because of the market moves out of the 159 because one candle of the 4-hour time frame is going to be a accumulation. Second candle is going to be a manipulation. The third candle is going to be expansion, right? So stuff like that, right? So you can see right over here, we marked down the 17 o'clock open, 17 o'clock close. Now we're looking for the things that we thought on the ETU free Mastermind CRT bootcamp, right? So now we're looking for our daily ranges. We're looking for ranges. We're looking for CRTs. Are we looking for a New York reversal, New York continuation, normal protection profile, delayed protection profile, which daily profile we're looking at, right? How do we know what daily profile we're looking at? Is simply by looking at the Asian session and the London session, right? Because you specifically trade New York session, right? So if you specifically trade New York session, you're going to look at London and Asia session for your daily profiling, right? So now, since our market is open, all I gotta do is look for London session and Asia session. In this case, Asia session soup out the CRT high of the London session souped out the CRT high of the Asian session. So I'm looking for, there was a push down. You can see right over here. No, let me just delete this chart right over here. You can see right over here, right? The CRT high got souped of the Asian session, right? Yeah. The market pushed down. So now I look at that. So now I'm looking at, if I'm bullish in this case, in these days, right? In this specific day, today, I'm bullish, right? I'm giving the current price action, right? In this day, I'm bullish, right? In the higher time frame, I'm bullish. So if I'm bullish, I want London session or Asia session to make the low of the day, not the high of the day. You can see in this day, London session made the high of the day, right? So I'm looking for a New York reversal. A New York reversal, what you're looking for a New York reversal is looking for the Asia session or London session or both of them to be protected and not manipulated, right? You can see in this day, the London session high is protected. So I'm looking for a New York reversal here, right? You can see now we're going to be looking for what type of New York reversal profile we're looking at. Are we looking at the New York reversal profile 1 or 2? The 1 being 1 AM accumulation, 5 AM manipulation, and 9 AM expansion, or the New York reversal profile 2, 5 AM accumulation, 9 AM manipulation, and 1 PM expansion, right? How do you know which one you're looking at? It's simply by looking at a confirmation. If the 5 AM candle gives a confirmation, a CIZ confirmation, and swoops out the CRT low or gives an S&P divergence and gives us a confirmation of a CIZ, then potentially looking for a New York reversal profile 1. If it does not give a confirmation and the next candle swoops out the 5 AM candle low or high, then gives us the confirmation by a CIZ, then we're looking for a New York reversal profile 2. So that's how we know which one we're looking at, right? Now, go ahead. What'd you say? Yeah. So based on this specifically today, there would have been no trade, but you would have been looking for a New York reversal profile 1, right? Because you had a CID confirmation, but this people would have taken the trade to the upside, but they would have faced a loss simply because some of them don't have the same rules as me, right? In my rules, it says I should have not been in a trade, but I made a mistake, right? I took a technical mistake, which we're gonna talk about as well, right? You can see it over here. Now, once we have our daily profile, now we're going to look at the order flow, right? What type of order flow are we in, right? So how do we find our order flow? It's simply by looking at the past, right? So you can see this high right over here, right? This candle. This is the last candle that tapped the higher time key level, which is the weekly order block, right? This is the last bullish candle that tapped the higher time key level. So we're looking for a market structure shift from here, right? So the order flow is still bearish until the market closes above this high, right? So you can see how the market broke below the lows, right? Rejection above the high, broke below the low. Rejection above the, you can see broke below the low right over here. Eventually, it can't be perfect as always, right? You can see reject above the high, broke below the low, right? So once it closes above this candle, right? So now the order flow is automatically bullish in this case, right? So you can see market came back down, pull back. You can see this low right over here. Rejection below the low, broke above the high. Low time from total soup, broke off the high, right? Then you can see right over here how the market, you could say, right now you could say, well, like the order flow is bearish. The order flow is currently still bullish. How is the order flow still bullish? If the market wants to go to a bearish order flow, he has to go through this bearish candle, right? This is the last candle that tapped the higher time key level, which is the weekly order block. You can see the higher time frame. There's a weekly order block on this candle. Let me go mark it down right over here. This right over here, right? That's the weekly order block. If you go to the weekly time frame, right? That's the weekly order block right over here. This candle is the weekly order block that filled liquidity, right? So let's go to the 4-hour time frame. All we gotta do is look at over here. So this is our line that we have for the weekly order block, and this is the last. Probably not that low. Is it this low? Yeah, this is the last low that tapped the higher time key level. How come is it not this low? Simply because this low right over here went above this other low, right? So this is the last low that tapped the higher time key level, which is the weekly order block. So if the market closes below this low, the order flow is going to be changed to a bearish, and you're looking for a low to get total soup and high. You're looking for a high to get total soup and a low to get broken through, right? But you can see right over here, the order flow is bullish, right? So now we're building up narrative. So how do you build up narrative? Simply by looking for the constants to be there. You're looking for the daily profile, order flow, ranges, CRT, right? When you have those, you're building up a narrative to a specific trade, right? So that's that, right? And on this day, we don't have a weekly profile here, because if I'm bullish, right, I'm looking for possibly could be a midweek reversal, but we don't know that until tomorrow, right? So for the weekly profile, I don't have it yet until tomorrow, right? So for the weekly profile, never, predetermine it, right? Wait for the market, wait for the weekly to go. Wait for wait for the week to go, and give you confidence is that then eventually throughout the week, you're gonna find out what the weekly profile to be, right? In this case, currently it's gonna be a classic expansion profile too, Monday half the week. But I don't have no narrative to the downside for me to look for shorts, so I will disregard this. So potentially to me, this could be looking like as a midweek reversal, Wednesday low of the week, or a consolidation reversal, Thursday low of the week, and Friday continuation to the upside, right? So now, once we have that, now we'll have to look for more concept, right? Our other concept could be the ranges, right? You can see for our time frame, this is the high, this is the low. At the inside of the range, you never want to buy or sell. We only want to execute once the range low, range high gets souped, right? In this case, range low got souped, so we're looking for a longs here, right? So now we're building up more narrative, right? Why am I picking this two specific price point? It's simply because of the higher time frame, the daily time frame, the daily CRT, right? So that's why I'm picking these two specific, highs and lows, right? Because range dynamic is subjective, so you have to go based on what you think is going to be the range, right? So now once we have that, all we're looking for now is looking for the CRT to get souped. After CRT low gets souped, the CRT high gets souped, all we're looking for is a model 1 confirmation, right? So right over here, you see this is our CRT. CRT low got souped, but you can see it went to a loss, but we're going to explain why it went to a loss, right? Go into that 15-minute time frame for execution. And you can see right over here, soup down below the low, give it a command 1 confirmation. You can see market, you look like you're gonna get respected. Eventually you drop down, right? But the last thing you're forgetting about is market profiling, right? You always got a market profile. So you're gonna scale down to the 15-minute time frame and you're gonna look for market profile, right? You're gonna go the past couple of hours and you're gonna do market profiling. What's the market currently doing, right? So you can anticipate the next move, right? So market, you can see right over here, it did a expansion, retracement, expansion, reversal, retracement. This is the CRT, and this is the confirmation for the CRT of the this is the right over here. Let me just mark it down real quick. This right over here is the confirmation, right, for the CISD. That's the CRT high, right? This right over here, CISD confirmed the CRT. Eventually that right over there, reversal, retracement, expansion, retracement, expansion, retracement, expansion, retracement, another expansion, right? Tapping the higher time frame key level. This could be a reversal, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion. Eventually doing another reversal, retracement, expansion, and stopping us out, right? Why did it do another reversal here? You go to the 4-hour time frame, it tapped the higher time frame key level, right? So after tapping higher time frame key level, you could do two things: accumulate, then expand, or it could reverse, right? In this case, it did a reversal here, right? But why did this trade go on a loss? Is simply by the time. You see how I told you time is way more important than price, and rules matters, right? You have a strategy, and you have a strategy, and you have rules that govern the strategy, right? So in my rules, it says that CRT low, there must be a legit low, right? In this case, it's just a random bearish candle, right? So it's not a legit low. My rule says that purge must happen between 6 a.m. to 10:30 a.m., right? And you can see it over here, the CRT low got purged at 5 a.m., right? And I still took this trade. I thought it was fine, but I made a mistake, right? It was not. I made a brand new mistake, which is fine, right? I backed it as well, and I found out actually true. So my mistake was the only time I should be caring about a S&P divergence is with the CRT, right? With the CRT low or CRT high. In this case, you can see it here, the CRT low, right? They both got purged in both quality pair. You can see there's a 1 a.m. candle low, 1 a.m. candle low, right? They both got purged. So I should no longer care about the CRT. I mean the SMT. I should only care about my other rules, right? So I broke a rule, then I faced a loss. You can see this one a loss, right? And that's why I lost. So I'll give you my rules if you want to follow my rules, or you can make the same mistake as me and still have the same rules as me and lose more money than me and waste more time. But yeah, if you want my rules, I'll send it to you. I'll literally send you some screenshots, right? And now let's go back in the chart and give you more example here, right? Yesterday, I think yesterday was no trade here, right? Yesterday, there was a trade yesterday, right? Yesterday you had the same type of bias here, right? You're looking for a CRT. Let me scale. Let me go do a bar replay on this. Right over here. Yesterday you could see there's a CRT right over here, right? The daily CRT. Yesterday we had the same bias to the upside because weekly CRT to the upside. We had a daily CRT right over here. We're looking for the daily CRT low to get souped. Once the daily CRT low gets souped, we're looking for longs here, right? So now let's go to the 4-hour time frame. On this day, you don't execute until the range low, range high gets souped, because I told you in my ETU free Mastermind CRT Bootcamp to only execute once the range high or range low gets souped. Do not do anything in between, right? So now you're avoiding a lot of that price action until the range low, which is all down here, gets souped, right? So now you're just gonna wait the market to play. Market win right over here. Right at the range low, so now you're looking for longs here, right? So over here, once the range low gets souped, now you're looking for longs. You can see now you mark down the 17 o'clock open right over here, 17 o'clock close, right? Which is right over here, right? So now what you do the same thing as the same thing right over here. Now you're looking for narrative, right? What do we have here? On the 4-hour time frame, we have a range dynamic. How is the range? Specifically because of the daily CRT, right? So how do you define a subjective range? Is basically by using CRT. CRT will give you a objective type of range, right? This is right over here. There's a range dynamic, and in range dynamic, you don't want to sell or buy in between the range. You only want to execute once the range high or range low has been purged, right? In this case, range low got purged. Now, that's one confluence, that's one narrative. The order flow is still bearish, right? In this case, the order flow is still bullish. Not bearish, right? So that's another narrative. Now you're looking for is a daily profile. What type of daily profile are you looking at in this day? So now, since you trade New York session, as I said before, all you're looking at is the London session and the Asia session, right? If you're bullish, you want Asia session to make the low of the day, not the high of the day, right? In this case, it made the high of the day, so you're looking for a New York reversal. In this case, what type of New York reversal you're looking at? You're looking at the New York reversal profile. I'm pretty sure this should be profile. I freaking forgot this one. Profile 2, 5 AM accumulation, 9 AM manipulation, and 1 PM expansion, right? Yes, you can see the 9 AM candle expanded as well to the CRT high when that's supposed to expand. Sometimes it could happen like this, right? There are types of CRT, right? You can see all you gotta do, mark out the CRT high. And the question is, how is this a New York reversal profile 2? It's simply because over here in this 2 CRT, right? It never offered a confirmation, which was a CISD. So this candle, it offered a confirmation, right? So all you do is now we have our narrative on the 4-hour time frame, daily time frame with a bullish order flow, weekly time frame with a bullish order flow. Not order flow. We have bullish drawn liquidity, right? So we have our higher time frame drawn liquidity on the 4-hour time frame. All we're doing here is looking for narrative. We have a bullish order flow. We're looking for a New York reversal. We press that range low. That's just enough for me to look for a trade here, right? And keep in mind, the lower the probability, the lower the narrative, the lower the probability. The higher the narrative, the higher the probability, right? You can see right over here. All we're doing here is waiting for a confirmation here, right? So you can see, go to the, you see my chart, right? This is the 8:45 AM candle low. In this case, at this trade, I did not take it because it broke my rule, right? So I did not want to break my rule, right? So you can see, as I said, you have a strategy and you have rules to govern your strategy, right? In this day, if you were to break the rule, you would have made profit here, right? You would have not made enough profit though, right? You would have made a what? A 1.5 RR, right? You would have not even 1.5 RR. You would have made like a 1 RR trade, which is like nothing, right? And if you were to do the same thing here on this specific day, on 2/19, you would have faced a loss here, right? You would have faced way more than usual because the market had a slippage, right, to a stop loss, right? So on this day, this is not my trade, but people will still take this trade right over here, right? You can see the CRT logo is souped at the 9 AM. So you're looking for a New York reversal profile 2, 5 AM accumulation, 9 AM manipulation, right? And 1 PM expansion. In this case, the 9 AM already went to the drawn liquidity, which is right over here. All you're looking at right here is looking for the 8:45 AM candle to get souped, or the 5 AM CRT low to get souped. And after that, once it gets souped, all you're looking at is a CID confirmation. And your CID confirmation is where? This scan right over here, right? You can see it right over here, right? This right over here is a low that, help it purge out this liquidity, right? You can see this low right over here, right? It's 2 bearish candle. help they purge out this low. You could say, I mean, this bullish candle, right? Help they purge out this, this 5 CRT low, but this candle is the overall that help they purge out these candles low, right? You can see this bearish candle right over here, right? This candle right here got purged. So these consecutive candles help to purge out this candle low. So this is your CISD. What we're looking at right now is for it to close above, enter there, stop loss right over here, take profit right over here, right? Eventually, this trade, you would have not even taken it because for a strategy, you must go only, for my strategy specifically, you must go for a 2RR or above. You cannot be going anything below 2RR, right? In this case, right? In this case, if you were to take this trade, stop loss right over here, take profit right over here, you're making a 1.3 RR. You're going making less than 2 RR, right? So this trade, you're making nothing, right? But you can see how we're building up a narrative. We have a hard time drawing liquidity, right? So now go to the hourly time frame for a even more redefined entry here. You can see hourly. If I go to the hourly time frame right over here, another CRT, and I'm gonna give you a quick little sauce, my boy. When there's a New York reversal profile 2, usually the 7 a.m. or the 6 a.m. or the 5 a.m. or like any time of the 5 a.m. 4-hour candle, there'll be hourly CRT to trade as well. So you can have a advanced entry, right? And this is only for the New York reversal profile 2, 5 a.m. accumulation, 9 a.m. manipulation, and 1 p.m. expansion, right? For New York reversal profile 1, do not look for the hourly CRT, but for the profile 2, you can look for a hourly CRT as well, right? You can see an hourly time frame right over here, right? We have this hourly CRT. Hourly CRT low got souped as well. All you're looking at is, oh shit, that's the wrong button. Hourly CRT low got souped right over here. Hourly CRT low got souped right over here as well, right? And all you're looking for at is a CIT confirmation. You can see these consecutive candles, right? Help the price out this low. And you don't care about these two. You don't care about the consecutive candle, but you can see the market close up this candle, the full candle range, and give it the more confirmation, right? And you would have entered your trade out of this, and you would have gone the same target, right? You can see how if you were to use the 15-minute time frame, right, your entry would have been all over here, right? If you were to use the 5-minute, your entry would have been, no, if you were to use the 15-minute time frame, your take profit would have been your entry would have been all over here, right? On a 15-minute time frame. But on the 5-minute, your entry would be right over here. You can see how you're getting an advanced entry. You're making way more pips, right? You're making way more profits. So this is the candle dug below these lows. And all you're looking at is a close above it. There's a CISD right over there. And keep in mind, in this trade, you must have a key level. You must have a Pacific time of the perch. You must have a key level in this case. Where does your key level come from? Your key level is this range low of the daily CRT, which is the range dynamic, which is a subjective thing, which is basically a sell side liquidity, right? So go to the 5-minute time frame to get a even more advanced entry on this, right? Right over here, entry there, stop loss there, take profit 1 right over here. You're going for a 1.4 RR. You can see how you're already making more than the 15-minute time from CISD entry, right? So the take profit 2 would have been a 3 RR. You can see how you're making way more than your 15-minute, right? Which one would you rather take? The 15-minute, which you want to go for 1 RR, or would you rather take the 5-minute, which you're going for a 3 RR, right? So now this way of entering only happens if you have a New York reversal profile 2. For a New York situation, you're usually gonna use a hourly CRT, so you're gonna have a 5-minute entry. But for a New York situation, sometimes there might be a 4-hour CRT, so sometimes you may use the 15-minute to enter. But this the rare cases, because usually for a New York situation, market does not like to do a huge retracement, right? So now to do way more backtesting here, right? You get it right now, or are you kind of confused?
No, I get it.
So now let's go back in the chart. You see how I'm building narrative, right? You see how every trade I'm building a narrative. I'm looking at the order flow. I'm looking at this and that, right?
Yeah.
Go ahead.
That's I out of 5, and I was getting out.
Oh yeah, that said, man, that's your old strategy, man. You don't gotta worry about that. As I said, you're gonna backlash against you. You back against me as well, but you gotta, you're strong enough to, what's it called in English? Barehand it, or not let it, mess you up, right?
Yeah.
The only
I
so
didn't
my bad. Go ahead.
I didn't know before about it. I learned.
Uh
So
huh.
I think that's very good.
So for the way you said you give mid play in a 5 minute time frame, you gotta know where's your key level coming from, right? You gotta know where's your CRT coming from, right? In this specific day, we have a 4 hour CRT and an hourly CRT. So we have a 4 hour and hourly CRT. We have a 4 hour CRT and hourly CRT. We're gonna go to the 15 minute. I mean, we're gonna go to the 15 minute. We're gonna go to the 5 minute as our entry, right? In this case, we have a 4 hour CRT and an hourly CRT, right? So now if you want to get even more advanced entry on this, we have to go to the 5 minute to take our trade, right? So you can see how we're getting it more advanced, right? But if we just have a 4 hour CRT, but not our hourly CRT, we're just gonna go to the 15 minute, right? So you're gonna have to use time from alignment. So if you have a 4 hour key level, 4 hour CRT, go to the 15 minute. If you have an hourly CRT, go to the 5 minute, right? To execute, right? So now I'll give you one more example. You get that or no?
Yeah, I get it.
So now let's go to the other one over here. Let me give you more example. I mean, you could do it yesterday. You could do Monday as well right over here. Monday, there would have been no trading day. How come? Although you would have had a narrative here. You see right over here. 17 o'clock open. You always want to mark that 17 o'clock open and 17 o'clock close, right? And you always want to have your chart clear. Don't have your chart messy because if I keep it drawing, my bad. If I keep it drawing to the next day, I'm gonna have a analysis paralysis. I'm gonna get confused. And this trade today, I lost a trade, right? This may go play against me tomorrow. Like, oh, I lost yesterday trade. I may lose it again, right? So you can see right over here. On this day, you would have not traded because you're in a range. You can see a range dynamic. You don't want to buy or sell within the range. This day, I had a mistake, and I eventually found it, right? And I had a. You can see in this day, you would have been in range, so you would have been avoiding this day. See, right when you get in a chart, you should this type of range. You avoid it until the market until the market purchase that range low, range high. In this case, the market did not purchase that range low, range high, so you just stay off the chart, right? You can see how the easy day right there, right? So you just avoid that day. Now all you're doing is go to the previous day. Now let's go to the last week, which is I think this is Thursday. Friday was no setup right over here. We're not gonna do that shit. Friday, but Friday you're looking for a near continuation here, right? In this case, let's go to the Friday real quick. Friday, what's our bias here, bro? Our bias is basically bullish, right? The higher time frame, we're going from a daily, daily range discounted area got tapped, so we're doing range high with a daily classic expansion profile 2 Monday low of the week, right? Looking for a Friday continuation. Friday tapped a IFG right over here. So Friday IRL to ERL, right? So you can see our higher time is still bullish in this day, right? So all we're doing is go to the 4 hour time frame or even the hourly time frame, right? In this day, would have gone to the hourly side of the 4 hour. Why? Because the new continuation market is not gonna do a huge ass retracement down here, right? So you go to the hourly time frame, and all you're looking at is what's the candle? This right over here, right? This is the 9 a.m. candle high. Right over here, right? So this is the 8 a.m. candle, right? And that's the but the near continuation. When you look for a near continuation, you only execute during 8 a.m. candle, during 8 a.m. to 10:30 a.m. or 12 p.m. Right? If you have an entry, that happens around 11 p.m. You can still execute it, but everything must be valid, right? Meaning the time of the purge be valid, should be valid. The total soup should be valid. Everything should be valid, right? For it to execute beyond the 10:30 a.m. mark, right? In this day, you're looking for longs. Why are you looking for longs, bro? Simply because if you're bullish, you want a position to make the low of the day, not the high of the day. In this case, a position right over here. This is this is a lot. I mean, the should make the low of the day or high. Let me see. Let me see. In this case, you can see that's why I said to mark the the open and the close. You can see how I got confused. I was looking down here. Right over here, you can see the open. This 17 o'clock open, 17 o'clock close. All we're doing here is looking at the previous session. Edition made the low of the day, so I'm looking for a New York continuation. So if I'm bullish, I want A position or London session to make the low of the day, not the high of the day, right? So all we're looking for is now we're looking for a new continuation simply because A position made the low of the day, not the high of the day, right? So now we're looking for a Alice CRT to get retraced. I got the 8 a.m. candle low and the high. And as you can see right over here, right? There's a CRT. on the hourly time frame, you can see the CRT right over here, right? This CRT, you could have used this candle as a continuation, but usually it's going to be a lower probability because for the near continuation, you only want to execute during 8 a.m. till 10:30 a.m. or 11 p.m. if you have everything is valid, right? So on this day, if you're gonna focus on higher probability and avoid less losses, you're gonna only execute during 9 a.m. or 8 a.m. to 9 a.m., right? From 8 a.m. to like 12 p.m., right? So all you're doing on this day, you're looking for a CRT low to get purged and go from higher, but it never did. You can see how the CRT high got purged first. So now once the CRT high gets purged, you don't want to look for a trade. Why don't look for a trade? Simply because now your bot's invalidated, right? Your target, your drawn liquidity for this session, for this specific day, was the CRT high, right? So now your bot's invalidated, your drawn liquidity get met without you. You just stay off the market because this right over here could cause a bearishness to the downside. Did it cause a bearishness? Let me see. Yup, it did. You can see how it caused a bearishness, right? So that's why it matters for you to know when your bot's invalidated. In this day, my bots got invalidated because market has a CRT high, and that's the only reason my bots got invalidated, right? So that's that. Now let's go to the previous week, which is Thursday. Right over here. Let's go down to the Thursday. Get my chart right over here. So for Thursday, right over here, we're building up a narrative. In this, you can see in this specific day on Thursday, the 21 o'clock 4-hour candle closed above this high. So now we have a bullish order flow, right? And now as we have that, now order flow is bullish. So now we're building up a narrative here. We have a range. This candle right here is our range high. Range low right over here. You can see right over here, right? And we never want to execute until the range high or range low been purged. Range low got, the CRT low got purged. But once the CRT low gets purged, we do not want to execute until the market gets down here. So on this day, your key level would have been this range low, right? And you would have not executed until the range low gets purged. In this day, the range low got purged right over here. And this specific day, if you're bullish, you want line adjustment or adjustment to make the high day, not the low day, right? In this case, line adjustment make the high day. So you're looking for a New York reversal profile 1. You're looking for a New York reversal profile 1 in here, bro. Simply because of the 5 a.m. candle giving you the confirmation of the CSD. So you can see how the 9 a.m. candle, right? Now puts the CRT low, right? Just went up and hit that drawn liquidity. So now you can see how we have narrative here. What else do we have narrative? That right there is enough narrative for us to take a trade here, right? And the other narrative we could have simply the higher time frame, which I've already talked about, right? Another narrative we could have right over here is a classic expansionary profile 2. Thursday continuation, Friday probably retracement. And this day, Friday was a continuation as well, right? So now let's go to the 4-hour time frame. Looking for a New York reversal profile 1, 1 a.m. accumulation, 5 a.m. manipulation, and 9 a.m. expansion. Now, in this specific day, we're not looking for an hourly CRT. We're looking for a 4-hour CRT. Why? Not hourly, because we're trading the New York reversal profile 1. The only time using a hourly CRT is a New York continuation or New York reversal profile 2. Right. So now let's go to the 15-minute time frame for execution. So once this low gets purged right over here, as you can see, this low right over here, right? This low has a legit low. So now this low is following my rules. Right. So now I could take this trade confidently because all my rules is here. I have now broke my rules. At a time purge at a Pacific time, 6 a.m. right over here, right? 6 a.m. candle. Had a purge at a right time, which is between 6 a.m. to 10:30 a.m. Our purge had a Pacific time. You can see market purge at the range low. The CRT low at a Pacific time, which happened between 6 and 10:30 a.m. And we're not going to execute anywhere here until the market purge at the range low. You can see PPI purge at the range low. Give it the more confirmation. This is the low right over here. This is the bearish candle that help it double this low and these other lows, right? This is the last bearish candle that stabbed into the lows. That's our CIZ entry. Entry right over there. Stop loss right over here. Right over there, right? And take profit would be this high right over here, right? You can see your take profit would be the CRT high of the 1 a.m. candle of the 1 a.m. for 159, right? So 1 a.m. accumulation, 5 a.m. manipulation, 9 p.m. expansion. 9 a.m. expansion, right? As well as the range. How can you take profit? How do you take profit right over here? Because the range low got purged, take profit can be range high, right? Short-term liquidity, long-term liquidity, right? Keep in mind, bro, some days gonna be complicated. So that's why you want to look at the short-term and long-term drawn liquidity, right? In some days, the weekly time frame may be bullish, but the daily time frame be bearish, right? And the daily time frame always leads to the higher time frame, right? So short-term drawn liquidity always leads to the higher time frame because market needs to go through phases, right? You can see in this day, you got your entry, you got to phase a little drawdown, which is fine, right? Because it's not a loss until you hit your stop loss. It's not a win until you take profit, right? So market eventually you take profit and eventually you fully reverse because Trump was speaking right over there. Trump spoke. He fuck up the market a little bit, right? Is that good enough or should we do more? And you got any question, bro? I'm gonna give you. Do you want my rules as well for my CRT trading or no?
Yeah. So I got
Uh huh.
uh
Uh huh.
so I'll let you know
Over here.
so I have
Uh huh.
which has to passes
That. Uh huh. Yeah. That's a very good question, right? That is between CRT. Yes. That this scanner right here, right? Doug Brothers CRT low. At first, it's gonna be our CISD, but guess what? This other candle went below this other candle, right? Now then it's gonna be this as a CISD. Market never closed above this candle, right? But you know that we're not gonna execute anywhere here until the market goes down here, right? And this candle made some bullish candle. Why do I not care about this bearish candle right over here? Because the next candle made a bullish candle, but this candle made a bearish candle, which stacked it, right? And you can see how these two candles are consecutive, right? Bearish candle, right? In this case, the reason I picked this and not this, because the only time it's like consecutive candles is because, I'm gonna show the entry, like, the only time you use a consecutive candle is because sometimes market may not retrace to the one of the consecutive candle. Market may just expand up or down, right? Without retracing, right? So market may have a consecutive candle. It may tap the consecutive candles, but may not tap the one you're looking at. And eventually market may just expand or low, leaving you out of the trade, right? It may make you miss it out, right? In this case, this is the only candle because how this two candles not consecutive, because this candle is a bullish candle, right? This is the only candle because consecutive candle means consecutive bearish or bullish candles, right? This is our CIZ right over here that helped it, that went below these other lows and give it the confirmation right over here. Because you can see this candles never gave confirmation, never gave confirmation, never gave confirmation. This one did. So this is our CISD. Anything else?
uh
So shit. So I'm gonna tell you my rules. And you could literally, you don't have to follow my rules, but you're eventually gonna have to follow my rules regardless, because through market experience you're gonna find out that okay, this rules I have to follow regardless, right? Let me show you what I mean, right? Let me show you what I mean. In this day, I broke my rules, I got stopped out, right? I thought I did not break my rules, but this S&P divergence right over here, right? Happened at Pacific time between 6 a.m. and you can see this low is supposedly get souped, right? So I thought it was valid, and the market, I eventually found out it was not valid. The only time I care about S&P divergence should be at the CRT lows. In this case, both of them souped at CRT low. So my bias would have been this SMT I should have not cared about, and this trade broke my rules, so I should have not taken it, right? And I'll give you more. Let me give you more example here, bro. Let me go to the hourly chart. Man, fuck SMT. I don't. Any like I don't choose, right? I see if it's there, I'm gonna use it. If it's not there, I'm not gonna use it, right? But
I see.
you see, I don't want to be like, oh, if there's no SMT, I'm not gonna trade it, right? But there must always be a narrative, right? The more the narrative, the higher the probability. The less the narrative, the less the probability, right? Let me see. Let me show you what I mean by that right over here. This specific day right over here. This is on last week Tuesday, which is gonna be a near continuation right over here, right? If you're bullish, you want Asian to make the low of the day or London to make the low of the day. In this case, they made the low of the day, so you're looking for a near continuation. In this day, you have your buy still bullish in this day, right? Because you have a weekly CRT to the upside, daily IRL to ERL. We have a daily CRT to the upside. If you go to the time frame, right? Daily CRT to the upside, daily IRL to ERL, right? You can see I have a hard time drawing the to the upside, right? So all you're doing hourly time for our time frame. Hourly time frame, looking for that continuation. You can see how it's so simple. I'm not shorting a random fair value gap. I'm looking at random. not shorting a random 4 hour for value gap, but I'm doing a specific candles, right? You see right over here, we're to enter the trade. This is the 7 a.m. All the time you're looking for a New York continuation, right? Because you're trading at 8 a.m. only. So let me go get that candle right over here. You see New York continuation. You can see how this low got souped right over here, right? You can see how this low got this LDCT low got souped. Market went up. You think this is a CISD? That's a false CISD. How? It's still a CISD, but it's a lower probability, right? And my goal is to focus on the highest probability setups, right? Because that's all you need, right?
So, a question.
No. You did get a soup here, right? But guess what? At the CRT low, at this specific price point, there's not a legit low. This is a swing low, right? But guess what? A swing low takes out liquidity. You can see the swing low took out the sell side liquidity low, right? So liquidity is taken out. And the market is controlled by highs and lows, right? Right over here, you can see it's now super legit low. So market gave a CID current for confirmation. But if you would have took the trade, you would face a loss. Eventually, market came back down, dug in below this other low. And this low, now this is a legit low right over here, right? So now this low was I want to confirm it to the upside right over here. Enter long there. Stop loss here. And you're targeting. This is gonna be your first take profit, but you're not only gonna go here, right? If you're a beginner, you can just go here. But if you're more advanced, right, you're gonna go to the daily CRT, right? But you see right over here, if you were to hold this trade for a long time, you think you're gonna go all the way over here, right? This is the daily CRT high, right? If you think you go all down here, you gotta face a loss. How are you gonna face a loss, bro? Simply because of is a near situation. So you're entering a position where it's way more dangerous, right? So you simply gotta reduce your take profit from here. All you gotta do is go to the 50% mark. Because 50% mark of a daily CRT is a form of a drawn liquidity, right? 50% mark right over here. So your drawn liquidity, instead of being all of that here, it's gonna be right over here, right? For a 9.2 RR, right? That's a lot of RR still, right? You're still making a lot of big buck right here, right? You can see right over here, my boy, who was his name? Trump spoke right over here. They made the market rip up, right? And let me give you more examples of the targeting the lower time from CRT to target. Risking the lower time from CRT to target the higher time from CRT here, right? So go to lower. Let me show you some example of that, bro. Go to the lower time frame. This right over here would have been a perfect example right over here. You're risking this 1 a.m. 4-hour candle low to target the higher time frame, right? So you're risking this low right over here, right? Is the weekly CRT low of the weekly time frame. That's the weekly CRT low, right? So you're risking that to target the higher time frame. So your drone liquidity is going to be all the way over here. That's a huge pip here. Going for like at least a 30 RR here, right? And bro, trust me, eventually, naturally, you're gonna become a swing trader. You're gonna risk the lower time frame, which is you're gonna risk the day trading entries to target the swing trading, take profits, right? That's a perfect example I give you, right? You see, CT log got souped. Once you're near to this, you're looking for a near reversal. You're bullish. You want the higher time in this day is bullish, by the way. You know how is it bullish? You go to the time frame. The weekly time frame, weekly CRT low got pressed, right? So we go to a weekly CRT high. Daily time frame, we go from a daily CRT to the upside, right over here, right? Daily ERL to IRL, but you don't care about this IRL. Why do we not care about this IRL? Simply because it's out of the CRT, so we care about this IRL right over here. Are we doing a 4-hour time frame? You can see our higher time frame drawing liquidity on a 4-hour time frame. And in this day, you can see that CRT log did not get soup, but there was an SMT divergence, right? SMT, the quality pair. Marking out the CRT high as already over here. All you're doing now on this day is you're looking for a New York reversal. That's all you should care about, right? And eventually, what else you have here? You have a range. You have a range here. Your range is going to be this range right over here. Why is it this 2 Pacific range? Simply because of the higher time frame. This ranges are subjective, as I said before, right? They're based on your opinion. You could say this is the range, right? But to me, it looks like it'd be this low and this high. How? Because in a higher time frame, there's a CRT, right? There's a higher time for CRT. This high right over here, this range high, is a higher time for CRT. So to pick the best subjective range is to look at CRT, and that range will be usually become a objective range, right? So we have that. You see how we have a narrative to this trade. I'll get the 17 log open. 17 o'clock close. New York reversal profile 1 AM accumulation, 5 AM manipulation, and 9 expansion. You can see the 9 AM didn't expand that much, but you can see after this, candles are just expansion candles. You know why? Because of the daily CRT, the weekly CRT, right? Now all you gotta do, you have the S&P divergence, go to the 15-minute time frame. Literally, this trade I saw it, but I did not freaking take it. I was like, I should have been trading the day before I impact news, so I didn't take it, right? Just PPI on Tuesday. On Tuesday was PPI, I'm pretty sure. Yeah, PPI right over here. But that rule is a bullshit rule, I'm not gonna lie. So right over here, you can see we're looking for S&P divergence that happens only between 6 a.m. to 10:30 a.m. You see how I have my rules here as well, right? You can see I'm following my rules. S&P divergence should only happen between 6 a.m. to 10:30 a.m. If it happens outside that time zone, I'm not gonna validate it, right? In this case, we go back in time. Let me go to the 4-hour time frame right over here. Book. Okay, where is it? Sure. Right over here. You can see the 1 a.m. candle low right over there. He got souped while this one didn't soup. So there's SMT divergence. And this SMT happened at Pacific time at 6 a.m. to between 6 a.m. to 10:30 a.m. And guess what? We had a confirmation. How do you confirm SMT divergence? Is simply because simply out of a CISD. You can see how we're using CISD for everything. CISD is the most powerful concept as well. It gives you less RR, but it's very powerful, right? The most powerful concept is the total soup model, right? And why are you looking for a 15-minute CISD and not a 1-minute CISD? Because people confuse this, right? People look at the 15-minute. People look at the 1-minute CISD instead of 15-minute. The reason you're looking for a 15-minute CISD because it's the 4-hour SMT divergence, right? So you have a 4-hour key level or SMT. You scale down to the 5-minute. I mean, not 5-minute, 15-minute, and you look for a 15-minute CISD, right? You can see how we're using time frame alignment, right? You can see everything. We're using everything that we taught on the ETU free Mastermind CRT Bootcamp, right? Enter there. Boom. This right over here would have been a long-term trade. It's gonna be this one. You would have risked the lower time from CRT to target the higher time from CRT, as well as you have risked the day trading entry to go for the swing trading take profit, right? You're risking the day trading entry to risk the swing trading take profit, which is all the way here. This trade would have taken you 2 weeks. Take profit is all the way there. You can see going for a 26 RR. Damn, the R is kind of ass here, but you see this on this day, in this specific day right over here, right? There was no entries. There was no entries here, no entries. You can see you only have one high probability setup. And why are you looking to go all over here? There's weekly CRT high simply because of the higher time frame and the time. You're taking this trade at Pacific time. You're taking this trade at a New York reversal, which is a New York situation. You're entering at a position where it's dangerous, right? In this case, you're entering into a position where you're entering at the low of the day or high of the day, right? Or like near it, because you're New York reversal, especially, and you're on Monday, Tuesday, or Wednesday makes a high of low of the week most of the time, 80%, right? So on Thursday and Friday, you want to cool off because Thursday, Friday, market is not going to do a big expansion, right? The next example I'll give you right over here, right? This is the trade I took. Right over here. Asking if divergence happened between 6 a.m. to 10:30 a.m. because it happened at 6:15 a.m. It's a 4-hour S&P divergence. Now you will risk this lower time frame CISD, target the higher time frame, right? Stop loss right below the CISD low. Target the higher time frame. And this trade, look, we're going for the same target, right? We're risking the lower time frame, right? Why are we going all over here? This day we're trading on Tuesday. So as I said, Monday, Tuesday, Wednesday makes a low of the week or high of the week, which is that Pacific day. You could risk that day to go for the higher time frame. So because that day you're gonna have a very protected higher or low, right? Where the market will have a less chance of stopping you out, right? If you were to trade on Thursday or Wednesday, you're gonna face. I mean Thursday or Friday, you're gonna face like troubleshooting technical problems, right? You can see. Let me show you the example real quick. What would have been a perfect example here? On this right over here. In this day, I'm not gonna show you the hard time. The hard time is bullish, right? You can see the hard time from CRT low got souped. CRT low got souped, right? CRT high, which is pretty sure to scan right over here. 17 o'clock. Yep. You can see on this specific day, if you're looking for a New York reversal, 1 AM accumulation, 5 AM basic 9 expansion, right? On this day, if you're looking for a New York reversal, your target would have been all the way to the CRT high, but you would have not gotten hit. Why? Because you're trading at Pacific time, right? Thursday and Friday are usually the day where the market likes to close at a fair price. So it likes to close the weekly range gap, right? So it likes to close at a fair price. You can see in this specific week, market did a huge expansion to the upside and to the downside. So market needs to close at a fair price. So Thursday would have not been a good goal to go to the CRT high. All you would have gone for was the 50% mark of the daily CRT, which would have been, I'm not sure which one was it. Is it this low? Yeah, I mean, this one over here, you can see the target would have been this 50% mark. So if you're looking for a New York reversal, and you can see how you have a context here as well. What's our context? Base dog got pressed. You want to buy. We're not going to go to range high because we're trading at Thursday and Friday. So we want to be way more careful. We're going to go for take profits that are not far away from our, far away from the market price. So go to the 50-minute time frame. What was it? Hold on, is this word over here? Shit, I'm kind of confused here. Oh, this day as well, you can see. I'm gonna go to the example, but this day as well, you can see how this day, if you were to break your rule and not have the specific time of the purge, you would have faced a loss right here. As I said, your purge must happen between 6 AM to 10:30 AM, right? In this case, look at the purge, right? This purge happened at 5:30 AM. And I entered this long, I took a loss, but guess what? Guess what? What did the market do again? Came back down, purge at the low at a Pacific time, which was between 6 AM to 10:30 AM, and gave us a model one entry right over here. You would have entered as long. Stop loss right over here. You would have gone for the 50% mark of the daily CRT. Why 50% mark? Simply because of the, of it being Thursday. This day you're entering the trade on Thursday, right? So you want to be way more close. You want to be way more fair where you're putting a take profit, right? So your take profit would have been right over here to the daily CRT. My daily time frame, the daily CRT right over there, right? Take profit would have been right over here. Right on NFP, you had a setup too. So your take profit on NFP, your take profit would have been right on the same take profit as the other one right over here, right? You can see. Push it down. Boom, we take profit would have been the same spot. This one I hit a take profit because market first we pushed up before pushing down. But if you were to hold this trade, right, to the high, would have faced a loss. You can see the market came back down, would have stopped you out at a loss, right? And let me give you the other example right over here. What was the other example? This right over here, New York reversal. This day, there was a low, but market this is the last low, the dog, but there's other low. So CISD. Entry there, take profit one, take profit two would have been all over here. Why not to the CRT high? You're trading on a Thursday. Thursday and Friday need to close at a fair price, so don't go for a unrealistic take profit. So now this is your final take profit. But if you were to hold that trade, you would have faced a loss, right? You can see that right over there, right? And is that good?
By the way, you have a trade. Let's say it's been 1 or 2 days open. And let's say tomorrow we have high impact news. Close the trade or you?
No, you hold the trade, bro. You hold the trade because if you're right, market will go in your way because the news, bank holiday, everything is, priced in. NFP is priced in. Let me go show you some example for that, bro. That's a perfect example I could show you, man. Good question on that. Let me show you some examples, right? Our drone liquidity, right? Say it again, please. Yeah, yeah. We're gonna fix that. We're gonna fix it up right now, right? You can see weekly CRT high got burst, right? This on the weekly time frame. This is CRT, right? Weekly CRT high got burst. Our drone liquidity is CRT low. This is FOMC press conference, right? FOMC press conference. What did the FOMC press conference do? Push down, right? To the weekly CRT low, right? And sometimes he may go against you, but market, regardless of how it is, it's still gonna go to the drawn liquidity. You're gonna go where the market needs to go to, right? Regardless of how it comes out, right? Because see, last week, CPI came out bearish, right? But guess what? What does CPI do? It came out bearish, so people looking for shorts, market still up higher, right? Because the higher time for John liquidity is still bullish, right? You can see that. You see how that easy that is, right? Let me show you my example right over here. This right over here, this is FOMC press con. I mean the NFP right over here, Friday NFP. John liquidity with the weekly CRT low. How come? There's a daily CRT right over here. This high right over here. Daily CRT to the downside. The short-term John liquidity to the downside. With the weekly CRT low, the drawn liquidity, the market went to the CRT low, right? That's NFP right over there. And let me show you my example right over here, bro. Any more example? NFP right over here. Your drawn liquidity was the CRT high, right? This your drawn liquidity was this CRT high and this weekly fair value gap. Where was it? You see your drawn liquidity was over there. You can see how NFP went to the drawn liquidity, right? We're not giving a fuck because this is news are already priced in, right? It's just to make people gamble, right? People make you like, you know how they say market paradigm, like, you know, the smart money come first, smart money patterns, then market paradigm, then uninformed money, you know, people, which is me, you, and everybody else, right? Market paradigm is like to scare us off. I mean, market paradigm is basically the market maker stuff, right? But people just make up lies. They're saying, you know, FOMC is random, everything's random. They're not random. But you can see on this day, on this specific last week, CPI came out bearish, but it still went up bullish, right? So market needs to go to, you know, to drawn liquidity. All news does, it just goes faster from a one price point to the second price point faster, right? Without going through phases. It's just gonna go faster than before, right? That's that, bro. So yeah, you got any question? And what I was gonna talk about? I was gonna talk about something, right? I was actually never mind. Go ahead. My bad. I was just thinking about something. I would have no. I was like, I thought I was talking about something, so I was gonna go talk about it, but I never know. I didn't even talk about nothing. So yeah, yeah. So you got any more questions? Like, you know, any more technical problems? Yeah. Yeah, man. Yeah, no problem, man. But yeah, that's that, bro. So yeah, do we gotta cover anything else? Let's see, what would I else gotta cover? What else gotta cover? Let me see. And yeah, the other thing we gotta cover is, bro, when they tell you to trade only during like 9:30 a.m. or 9 a.m., they're false because the market goes by the 159, 159. You can see the 1 p.m. candle, the 5 p.m. candle, 9 p.m. candle, the 1 a.m. candle, the 5 a.m. candle, 9 p.m. candle, infinite, right? It's not by a non. It's not by a New York country. Like, you know, the A session is a session, right? The New York session is a session, right? Not just a session, right? But you don't go best out of that. You can see in these trades, right? This trade you're entering in 6 a.m. when they say don't enter before 8 a.m. right? In this specific day, you're entering at 6 a.m. In this day, you're entering I don't know what you're entering at 6 a.m. No, you're entering at 7 a.m. right? See how you're entering before 9 a.m. or 8 a.m. right? That is false. Market goes by 1 4-hour candle is gonna be accumulation, which is like 1 a.m. accumulation, 5 a.m. manipulation, 9 a.m. expansion, or 1 p.m. accumulation, 5 p.m. manipulation, 9 p.m. expansion. You can see how it's with like one of the candles accumulation, one of the candles manipulation, one of the candles expansion, right? You see how it's like that. So yeah, the new kill zone is like a false thing. Just go based out of that because the manipulation of the 4-hour candle, 4-hour time frame is all you care about. The manipulation is the one you should really care about because the manipulation could happen at 6 a.m. all the way till 10:30 a.m. right? Or it could, you know, how can I say this? I mean that's the time, right? Or it could be a full 4-hour candle, could be a manipulation, right? Usually the 1 a.m. accumulation, 5 a.m. manipulation. So the 5 a.m. 4-hour candle, the whole candle is gonna be a manipulation to, take sellers and buyers, right? And make a move from there on. And the next candle is gonna be expansion. In this day, the specific day, you can see 1 AM accumulation, 5 AM middle 9 expansion. The 9 AM expand to the downside. Why they expand to the downside? Because my rules was not there. My rules says I should not be trading, so I broke my rules. And this day I did not break my rules. I just didn't see it, right? I thought like, I mean I didn't see it. I thought like, this estimate divergence, I'm good with it because this low is not gonna get souped, so I'm still valid to take a trade. But I eventually found out the only time I should care about it is through the CRT low, the CRT highs, right? So I already covered, with that. But yeah, that as well. So, but if you're a seller in this day, in this specific day, if you're a seller, you'd have been you're looking for a near continuation, right? So if you're bullish, if you're bearish, you want the 1 AM candle to make the high day, not the low day. In this case, you make the high day. You're looking for, I'm saying the 5 AM to get for the 5 AM high to get souped, and then to continue to the CRT low, which is all the way right here. Right? You can see how the market did continue to the downside. So yeah, that's that, bro.
Nice.
So everything is good. Everything is nice. I will send you my rules and I think a chit chat general, right? I'll send the pictures of every rule I have. But yeah, all right, brother. Thank you for this one-on-one session. Oh yeah, I hope you enjoyed it. I hope you learned something from it. But yeah.
Yeah, man. Yeah.
Uh-huh. All right, brother. I'll see you later, man. Peace out. Yeah, you too. But yeah, thank you for watching, chat. Nice one-on-one session. I usually do for paid. But this guy, I love this guy. I did it for free. But yeah, this is a one-on-one session with one of our ETU free Mastermind CRT Bootcamp members, the guy who participated. So yeah, I'll see you guys later. Wish you guys like, subscribe, comment, and I'll see you guys later. Peace out.